This is Anthony Rinaldi, founder and managing principal of Saxum Real Estate. Saxum's a boutique real estate investment and development firm. I'm joined by Matt Wassel. Matt heads all of leasing for Saxum. Matt, it's great to have you.
Thanks for having me. It's great to be here. Excited to talk about how COVID-19 is going to affect office space going forward.
Yeah, big topic. Matt and I spent a good part of our careers both on the leasing side at our respective firms. So we have a great deal of leasing background, specifically in the office space, corporate portfolio management, corporate leasing, and a decent amount of our portfolio has been focused on creative office, boutique office throughout the United States. So with that, Matt, let's kick it off. Where do you think we start?
I think this all starts with the way that companies are going to look at their office space and their office footprint differently. Really overnight, employees took their computers home from work and they were told that they were going to be working from home for really, the foreseeable future. So kind of an unprecedented time and a trial period that no one really planned for, of course, but I think a lot's going to be learned from this.
Yeah, there's no doubt that this is going to have an impact on office users, on how we interact with our work environment. Once things begin to turn back to normal, and hopefully within the next couple of months, we as a country are going to see economies start up, offices to be filled again in whatever capacity that's going to be, and people to start being able to bring back some sense of normalcy. But what is that new normal? Matt, with the office space, what are your thoughts?
I think it all starts with density. Over the last 15, 20 years in office space specifically, we've seen an increased densification of space towards benching, a trend towards hoteling, and really being able to maximize efficiencies within a space such that each employee is getting, less than 200 square feet for their own use.
So do you think density's done, or do you think it just looks different?
I think it looks different. I think, practical density and density on paper is probably something that, should be distinguished. Companies look at how many square feet that they're occupying and how much square footage that they're paying rent on ultimately against the amount of employees that they have at that space. And I think as productivity is proving to be relatively unaffected in some industries as people work from home, maybe companies are going to look at this as an opportunity to say, maybe employees can work from home 2 or 3 days a week. Maybe they don't need to be in the office at all time. And on paper, maybe it's 10 employees or so dedicated per 1,000 square feet lease, but on a day-to-day basis, maybe it's 2 or 3 of those employees in on the office. Companies are going to use this as an opportunity to study productivity, to study operating expenses, and come up with a solution that makes most sense for their business.
Now, everyone's been talking about working from home for, 20 years, 30 years, whatever it's been. You've seen a shift in working from home, but nothing has created a large impetus or movement to that work from home. Now we've had that. The majority of people that worked in the office are working from home. So now everyone's tried it. Companies have got to see that level of productivity. And then what is that going to mean now that we've tried this for the go forward? What are your thoughts?
Yeah, I think it's a great point. The productivity that's being measured right now, it could probably be improved. Children right now are not going to school. So I think, at the relative return to normalcy, employees will even be more productive as they're not having to play the parent-teacher role. Also, I think companies will spend more on infrastructure to allow employees to have a more readily available work-from-home environment. Employees one day went from working with multiple screens and all the tools available in the office to working out of their living rooms. And maybe you can't reach 100% capacity if you don't have multiple screens and all the infrastructure around you that you're used to.
It's also easily adjustable, right? Like, look at our offices. We closed them down. I think March 12th was the last day. We ordered the dual monitors, keyboards, everything within 3 days, 2-day delivery from Amazon. And I don't know, $300 to $500 per person. You were able to get, exactly the same setup you had at the office. So when you think about that, right, as it relates to large corporations who can essentially get a setup for an employee at home versus the cost of real estate, a one-time cost, and maybe this stuff lasts every 3 or 5 years versus an ongoing real estate cost, that cost benefit, it's a brainer. And it's very easy to do with the technology now.
I think we were really agile with the way that we reacted to the potential onset of a mass work from home environment. But in speaking with family and friends and investors that, we're not able to move that quickly, I think that they're seeing a much more challenged infrastructure in their work from home environment. Another thing I did want to speak to your earlier point is how density is looked at differently just in terms of square footage occupied and the way that spaces are being designed. In speaking with our architects and engineers and friends that are architects and engineers, they're already being tasked with how do we change the way that we arrange our offices. It's less densification, it's more readily available equipment for hoteling. So, if an employee is working from home 2 or 3 days a week, that bench seat maybe no longer is dedicated to XYZ employee. Maybe it needs to be a little bit more agile and more flexible. So I think increased conference rooms and just less of a focus on stacking as many people in a small amount of space as possible, I think will be a pretty rapid shift and one that's pretty widely employed.
I think right out of the gate, you're going to see back offices that aren't client facing, forward facing, or need to be, an executive managing people or very collaborative environment. Right out of the gate, a lot of those roles can actually just go work from home entirely. What does that look like? Does that mean corporate office users who maybe one of their largest expenses is their office space? Does that shift by 20% because they can put a decent amount of people just working from home? This has proven out that people are productive in their home environment. And especially if you set it up right? You have utilizing tools like Zoom or Microsoft Project Teams, things that facilitate working from home. Does all of a sudden, a chunk of your back office start working remotely? And then that has downward pressure on overall office demands in general. Do you think you're going to see a shift in just more roles and more positions being kind of just altogether work from home and not even giving them office space, even in a hoteling environment?
Forward-facing type of roles will always have a place in the office environment. You're always going to need a place for clients to come visit and for you to pitch new business, et cetera. I think a lot of those production type roles will always, maybe a lesser degree, but to some extent will always require some sort of physical office footprint. But I do think that's going to result in a flight to quality. So if those are high producing type of roles and the idea is to be closer to your clients and to be able to recruit really top end talent, does it make sense to be in a suburban office park paying commodity type of rents, or do you go to a more walkable kind of eccentric type of environment for recruiting and proximity to client type of purposes? Maybe it makes sense to go to a Summit or to a Jersey City or Hoboken or a Red Bank type of environment, speaking about New Jersey specifically, rather than being in suburban type of markets where you were really only there in the first place because you needed to spread out and put a lot of your employees in seats.
On the flight to quality, I think that's gonna ring true more than ever. And the ability to recruit and retain talent. I think you're going to find employers looking to move to areas that employees want to live versus move to an area and expect employees to go there, right? Where all of a sudden they say, you know what, you can work from home 2 or 3 days a week. We'll do it and teams are rotating. So maybe it's Monday, Tuesday, one team, Wednesday, Thursday, or Wednesday, Friday, another team. Company of maybe 1,000 people. They might only need space for what would have been 400 or 500. And really reduce their occupancy costs significantly. And then by doing that, they can go to the higher quality areas. For example, in New Jersey, right? I'm going to shed the 40,000 square feet I have in Parsippany. 20% of my employees are going to work from home almost all the time. The rest are going to come back and forth, and only 20% are going to be in the office 5 days a week. And so we're going to go take 10 or 15 or 20,000 square feet in Montclair or Summit or Morristown, where it's this great environment where people want to be here. The few days that they're here, they're energized and they feel excited to be at work. But we're also going to have this premier office that's very good for the forward facing client. And ultimately, I do think the real tired old suburban campuses are going to be stressed and continue to be stressed.
And I agree. I think another piece that we should touch on is term flexibility. Be less willing to spring for raw space that needs to be built out, pre-built spaces that can allow for 2 and 3 year lease terms, or even co-working where there's a little bit of flexibility there, to allow people to be in these environments, but not having to sign a 10-year lease.
I think a lot of their ancillary offices, that is the case, right? You have ancillary, non-forward facing, non-client facing offices. You're going to 3-year lease terms, see how the world is, see how this shakes out. Why commit, not invest capital? But I do think in their main flagship headquarter like locations, they're going to be investing a significant amount of dollars in, because that's the place that they're going to allow to be the brand, to be their flag, to set the company culture. And I think it's going to be super imperative to have really amazing space, employee experience, as well as client experience in those few flagship locations, and then the rest is going to start either disappear or minimal investment, minimal lease term. I agree with that. But with that, this has been a fun conversation, Matt. I've enjoyed it as always. Appreciate the time.
Great. Thank you, Anthony. This was great.